The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Happy Friday, everybody. We get triple witching. We get index rebalancing. I'm Alex Steele, live at Studio 2 here at Bloomberg headquarters. I'm Alex Steele.
And I'm Vonnie Quinn, and we are counting you down to the close.
So it seems exciting, right? There's stuff that's happening, but in reality, on a headline level, it's pretty tame. The S&P is down just 0.3%, tried to make a run into record territory, but was off by about 4 points. Utilities, best performing sector within the S&P. Is that a defensive play, or is it actually a growth play? Constellation Energy, we'll talk about that throughout the show. 210 spread, 15 basis points, continuing to steepen its way up, and the VIX relatively calm. So if we were just to look at this day, it would look pretty boring, I have to be honest. But underneath, Bonnie, there is a lot going on.
Oh, there absolutely is. And we are seeing healthy volumes today. Alex, you mentioned it earlier, more than $5 trillion worth of options expiring today. The market facing its biggest index rebalancing in almost 4 years. We have been saying that that could see billions of net buying in tech. We might still see that going into next week. But as of right now, the S&P 500 is down 0.3%. The NASDAQ itself down 0.4%. And as you can see, the VIX not really doing too much. So there is just a little bit of let's wait and see, and also some Fed comments that we have to parse, which we'll get to in a moment with our guest. Meanwhile, euphoria in equity markets following the Fed's interest rate cut is stoking the risk of a bubble. That's according to one strategist. Bank of America's Michael Hartnett saying stocks are pricing in 18% earnings growth by the end of next year. He writes, it doesn't get much better than that for risk, so investors are forced to chase the rally. His advice, buy the dip in bonds and gold. And with 46 days to go to the election, Trump and Harris continue to hit swing states. We take you to North Carolina, where it's been a dead heat between the candidates. Governor Roy Cooper speaks on Bloomberg Television later this hour to talk about the race and the controversy surrounding Republican Lieutenant Governor Mark Robinson.
All right, Bonnie, well, let's take a look at some of what you were talking about in terms of that volume and triple witching. So here is where we are with the S&P. You can see the rise higher, and this is the volume for the index. These are some of those high volume days when we get options expiration. Here we're still relatively calm, but we might see that spike. Just on the open, I was really floored. When the cash market opened, you saw triple-digit volume above the 10-day moving average in the Dow, the S&P, as well as the NASDAQ. Now it's been relatively calm. You still see above average volume, but into that close, those last 5 minutes will be really interesting in terms of any whipping market action we will see. Plus, you get that index rebalancing, and will we see even more of that as we head right to 4 p.m., Bonnie?
Right to 4 p.m. and beyond into next week, Alex. Let's kick things off now with Sarah Hunt, partner and chief market strategist at Alpine Saxon Woods. Sarah, thanks so much for joining. We did get some level of, volatility today because we got some comments from Fed Governor Waller, and then, of course, Mickey Bowman, also a statement. She was the dissenter on the FOMC. Was there anything about inflation or the employment picture in any of those comments that stood out to you?
I think what's obvious is that is the big question right now is what's the most important thing. It seems like inflation has been sidelined and people are much more worried about employment, but there's also some concerns that inflation might not be completely quiescent going forward. So I think that there's that tension, and you can see it by the different comments and the different opinions on the board right now.
Now, we do have the 2-year yield back to roughly where it was before we got this 50 basis points cut. What is that saying to you? Because we're not getting that much movement in it. Is the market going to push for another 50 at some point? Or is the market content to just wait and see what happens next?
I think what it says is that the market was so primed for that 50 that 25 would have almost been a surprise and not necessarily a positive one. But I think that, you'd been seeing the yield come down since June. And I think that what it really was doing was putting that back in line with where they think rates are going, which is going to continue to come down. But I think that Chair Powell was trying to telegraph, we're going to do another 25 and another 25. Don't look for 50s as a base case. So I think you'd have to see the data change a lot for that to change, because I think that it was almost fairly explicit in the way he was talking about it at the press conference.
All right, so let's go to the rally, right? We have this record rally yesterday. Today we're taking some calm. You can make the argument that the rally yesterday was more related to, say, options and having to move positions as we head into options expiration. Or you could say, no, we're going to be reacting to the Fed and we want to buy stocks and we're looking at some FOMO. Which one do you think?
Well, I think the reaction when the rate cut came on the Wednesday, right? You saw the market run up and then you saw it come down and you saw it run up and you saw it come down and it ended on the day red. I think that it was sort of a digestion of that information saying, okay, what is the Fed really saying and what does that mean? And I think that equity rally was, it's going to be okay and we think that things are all right and we are in that Goldilocks soft landing camp. I think that that's what yesterday's action was around. And then you have the question of, okay, now let's think about that again and let's look at that from a different perspective and some of the questions that have come up about what's the employment picture really look like? I think that's where you start to get some underneath questions, and you're sitting at all-time highs on the equity indices, so it's not a surprise to see a little bit of a pullback here.
What do you like right now?
It's tough right now to find stuff that you like, because even if you like it, you have to assume that the economy is going to roll with you and it's going to be okay and you're going to see the growth and the growth in earnings is going to come, because if it doesn't, the multiples are still pretty high. So it's looking for companies where you think that there's some room for them to continue to move even in a potentially slower economic backdrop, but it's tough right now with where equities are priced. It's hard to decide what looks really good right here.
Sarah, how are you thinking about the employment picture? Because it's clear that the revisions to the labour market data were a surprise to the Fed as well. The Fed Chair Powell said it straight out basically at the news conference. And he said we might get more revisions in the future. So what's not to say that even if we get a better or a not terrible jobs print next time, that it won't be revised down and that the Fed shouldn't be going again?
So the people who were convinced that the Fed is more worried about employment than it wants to let on are taking those kind of comments and taking also the fact that you had those revisions. I think the issue is we started from a very low unemployment rate. So if we had been at 5 or 6 and seen those revisions, I think it would be a different story but since we're still in the 4s and the low 4s, it seems like less of a problem at the moment. I think some of the issues are going to come between the part-time versus full-time jobs and what consumers are going to do. Because when consumers are comfortable, they spend. And if they don't spend, then the economy has bigger problems. Right now, the consumer seems to be continuing to spend, but I don't disagree, and I think that there may be some revisions. And I think that's one of the reasons the Fed wanted to move a little faster. And I think it's a little bit of catch-up for July.
Mid-caps, small caps, are these the place to be?
That very much depends on your view of the economy, right? Because if the economy is going to be okay...
What do you get the soft landing? If we get the soft landing.
If we get the soft landing, then mid caps and small caps are in a good place, right? Because you've got the growth, you've got some interest rate help, you've got a bunch of different things going on that are positive to them. If you're getting a slowdown and a contraction, that's not going to be as easy for the mids and the smalls.
And if it's a FedEx, if like what FedEx said last night is like a harbinger of the economy, then what? Large cap tech? Utilities?
Well, I mean, I think in any case, large cap tech is not going to take out of the picture. You're not going to say we have to get away from tech. I mean, yes, there's been a correction in some of that large cap tech, but it's still where the cash is. It's still where the growth is. It's really a question of what else do you do with your money as opposed to just that, right? So I think with FedEx, it's hard to figure out if that's a harbinger or if it's idiosyncratic because of the problems that you're still seeing a healing in the supply chain. Yeah. You've had such a mess for the last couple of years. So people were over probably FedExing big things and heavy things because they needed to get places. So it's hard to see what normal is for FedEx.
That's such a good point.
On the other hand, it's like you don't want to see freight do badly. Right. That's not a good sign.
Right. Period.
Right.
All
Period.
right. Hey, Sarah, great stuff. Really appreciate it. Happy Friday to you. Sarah Hunt, partner and chief market strategist over at Alpine Saxon Woods. All right, coming up, we're going to talk to the man at the helm of a company that makes medicines for so many of our beloved pets. CEO of Elanco Animal Health, Jess Simmons, will be joining us on The Big Show.
Plus, Nike just doing it. Shares kicking higher after announcing that their CEO, John Donahoe, is out and industry and company veteran Elliot Hill is in. We'll get more details in our top calls.
And Election Day inching nearer with early voting already underway in some states. We're going to have a special swing states conversation with North Carolina Governor Roy Cooper. All that and more coming up. This is The Close on Bloomberg.
I'm David Westin. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week.
More than what you need to know, it's what you need to think about.
Some paw positive news today for Elanco Animal Health. How was that? Was that good enough?
That was great.
All right. The animal pharma company fetching an FDA approval for its canine dermatology drug, Zenrelia. And this opens the door for Elanco to tap into the growing $1.7 billion canine dermatology market. Now, despite this, it's been a tough day for the overall market. Shares are down at 6% on the day. Joining us now with more is Jeff Simmons, President and CEO of Elanco. All right, Jeff, thanks so much for joining us. I got to ask about the stock market reaction. Do you think it's related to the news? And if so, why? Or is it something else?
Well, look, we believe that this is a great product. It's coming in. We're working and spending time with investors, but it's really a drug that's coming into, as you said, a major market with a need. I mean, we see veterinarians today looking for another option. There's very few options. This is the number one reason that pet owners go to the vet is itching dogs, and they only have a few options today. We've got over, as I said, 70% of vets wanting this. So Zenrelia brings exactly what pet owners are looking for in veterinarians. They want more efficacy, more convenience at a lower cost, and that's exactly what Zenrelia does, and we're excited to share that. And I think, when I look at the stock and look at actually the marketplace, we're one of the most compelling value propositions in one of the most exciting areas and industries, animal health. And, we're in the middle of historic innovation. 6 blockbusters between now and the end of 2025, and really 3, 1 per quarter in major markets. We got 1 in methane and cattle we're launching right now. Now we're going into a close to $2 billion derm market with Zenrelia. And we're bringing in a $6 billion market, Credelio Quattro, an approval in the 4th quarter and launching in the 1st quarter. So historic launches, innovation, and that's what's going to drive our stock price over the medium and long term.
That was great. Methane for cows. That's going to be very cool. We got to come on and talk about that in a second. But for this particular drug, most analysts are really positive about what this represented for your pipeline. I am wondering if you're going to have to sort of sell it at a discount to get that uptake in the initial launch and what that might look like.
Yeah, our launch price is all driven around, looking at the market research. We want to do 2 things. We're going to expand the market. So today there's still a lot of dogs that don't have accessibility of modern innovation. And what this does is this starts to bring more dog owners that actually cannot afford today, a good innovation like Zenrelia. So that's number 1. And number 2 is we're doing this to drive more vet clinics and more veterinarians to bring it in initially because of what we've seen. This product is more efficacious. And let me just share in secondary endpoints in a head-to-head study with the current JAK inhibitor that's on the market. It's showing that we brought 77% of dogs back to normal versus the competitor at 53%. So because of that, also it's 1 dose a day, not 2 initially that's needed by the current market product that's on the market. And that incentive on cost is just going to get more of this product in more hands. And we've seen that. What excites me most in the last 24 hours is the response from veterinarians and pet owners initially hearing about this product. And the interest has been, we've got over 2,000 veterinarians on our first call that we're going to have over the weekend.
Yeah, no, absolutely, Jeff. Really, for dogs, it's just wonderful news. Do you think, though, that perhaps market participants think you're maybe being a bit too optimistic with your outlook for $600 to $700 million in revenue from new products by next year? Are you standing by that outlook?
We are standing by that outlook. That data was coming out of 2021 in our investor call, and we've been significantly increasing that over time. We increased our innovation guidance this year between 400 and 450 million, so we're well on track. That's a 150 million jump from 23 to 24. So as you look at going from 24 to 25, we're going to go from this 425 million up to 600 to 700 million, and it's going to be driven by, first, all the products that we currently have are continuing to grow nicely. They're our key drivers, and now we've got 3 products, as I mentioned. You've got Bovaer that's in this methane market that we see as a $100 to $200 million potential product. Zenrelia coming into this $1.7 billion derm. And then Credelio Quattro is going to be the broadest spectrum product in the largest animal health market, and that's the whole parasiticide, tick, flea, heartworm. And that product will be launched in January. So with those 3 drugs on top of the momentum we currently have from the innovation, we're well on track to that 600 to 700 million. And that's the big driver on the compelling value proposition of Elanco.
Yeah, and it'll do you well in order to get your debt down as well. Your debt burden will be much relieved. What about the farm animal product side? You mentioned the methane product and so on, but is there more that you can do there?
Yeah, absolutely. We've got 70 years we're coming up onto. We're the leading brand for farmers and veterinarians and pet owners. We've had a long legacy of the farm animal business. We're leading right now and taking share in this market. It's been one of our growth drivers here in 2024. And a lot of it's really around the following. And Elanco walks into, when you look at poultry, dairy, beef, swine, we're a leader there. We walk in and we look at food safety, we look at feed efficiency, and we also now are starting to look at how we can reduce methane and ammonia. We had the first product that was approved by the FDA a few years ago called Experior for beef farmers. Well, that product is going to be our next blockbuster. It should get near $100 million in sales this year. And now Bovaer is going to be used in dairy to actually reduce methane. Methane's key compared to carbon. It's a short-lived gas. And we've created an inset market where dairy farmers are going to get another in-stream, monetary in-stream. So in addition to a milk check, they're getting a carbon check from an inset market that we've set up and already established. So exciting times on the farm animal business. And you're exactly right. Growth, innovation, cash is what drives Elanco. 4 quarters of good growth. We're guiding for growth for the rest of the year. All the innovation we just talked about. And we've reduced our debt 22% by really selling off our aqua business. Our stand-up costs are behind us. Free cash flow conversion's up. And that's also going to be a key driver. So we're an execution story, a lot of momentum, and today's an example, a great proof point of another milestone for this company.
All right, Jeff, thanks a lot. We really appreciate it. Congratulations as well. Jeff Simmons, President and CEO of Elanco Animal Health. Thank you very much. Some breaking news for you. This headline comes from the Wall Street Journal, Bonnie. Qualcomm has approached Intel about a takeover in recent days. Qualcomm shares dropping to a session low and Intel shares jumping to a session high. Again, this is coming from the Wall Street Journal, but quite interesting.
Quite interesting because, as we know, Intel has been having a difficult time of it, trying to turn things around, putting all sorts of small plans into place. You know, if Qualcomm were to take over a much, much smaller Intel now, it's basically, a fraction of the size that it was. Well, would that be something that would solve Intel's problems? Would that be something Intel would want? Would they want to try and find some kind of white knight? What would regulators say about it?
Oh, well, yeah, that's definitely a conversation as well, particularly that where the government really wants to be able to support Intel and the foundries that's building here in the U.S. Also, just taking a look at Qualcomm stock, yes, it's down by almost 5%, but over the last year, it's up by 53%. It's off its highs, to be sure, but nonetheless, you have to wonder about the currency there that Qualcomm now has as well.
Yeah, and it actually looks like we have a pause in Intel trading right now due to volatility.
Okay, well, we're going to keep our eye on this headline again, coming from the Wall Street Journal, that Qualcomm has approached Intel about a deal in recent days. All right, coming up, Nike did it. Change CEOs, that is. Next in Top Calls, we'll discuss what the incoming CEO can bring to the table. This is The Close on Bloomberg. All right, time now for Top Calls. A look at some of the big movers on the back of analyst recommendations. So first up, we got Snap. B. Riley starting coverage of the social media company with a neutral rating and $11 price target. The analyst says Snap is trading at a premium to its peers with full valuation. He also warns the brand advertising could be an overhang to Snap's overall growth and hopes Snap can increase engagement from daily active users. Shares are up by 0.4%. All right, next in line, we got Affirm also getting new analyst coverage, cashing out on a positive rating from Susquehanna. The analyst says the buy now, pay later company has various lanes of growth and that more interest rate cuts from the Fed could provide a tailwind to consumer spending, leading to more growth for Affirm. Those shares are up 0.6%. And finally, brutal day. FedEx just could not deliver what analysts over at Morgan Stanley wanted to see. The firm cutting its recommendation to underweight from equal weight. That's after FedEx slashed its annual sales forecast. Now, the analyst is concerned about the magnitude of that miss and says that issues might be structural, not cyclical, which means they might not go away anytime soon. Shares are down 14%. And those are some of our top calls. Bonnie?
Alex, thank you. Well, one stock that has analysts somewhat excited rather than disappointed is Nike. Shares swooshing upward today after the sports apparel retailer announced changes to leadership. CEO John Donahoe will retire next month, and former Nike executive Elliott Hill will return to the company in his place. But is doing it a win for Nike? Joining us now to help answer that question is Jim Duffy, sports and lifestyle brands analyst at Stifel. He has a hold rating on the shares, which he reiterated. So, Jim, what does Elliott need to do in order to revivify Nike? Is it about technology and innovation, or is it more about marketing and brand ambassadors?
Well, there's a lot he needs to do. Let me start by saying that we and most in the market are happy to see a Nike insider as CEO again. Elliott Hill has a good background for this. We were writing about him as a potential CEO candidate in 2018, potentially succeeding Mark Parker. He's known as a character guy, people person, and a good leader. And I think that's a really important skill set, because a lot of what Nike needs to do is reinvigorate that entrepreneurial culture that has made them the great company that they've been for so many years.
How long do you think he has to make some progress, and what's going to be the metric with which he is judged on that?
Yeah, the metric is going to be top line. Nike's currently seeing revenue declines in a growth market, so getting outperformed by the market. We think 2025 is a turnaround year for Nike. They have an investor day coming up in mid-November with the new CEO appointment. Ahead of the investor day, we do expect to see additional leadership shakeup at Nike. And we think that there is going to be a focus on breathing new life into the product engine, bringing exciting new products to market and telling stories behind that. But the product cycle here is 15 to 18 months. It's going to take some time.
It is, and On is coming for Nike, right? It's not the only one, but they signed Zendaya. They've signed now also FKA Twigs, and people that are really in sort of the youth demographic that will really bring in new customers. If Nike has all of that to do, Jim, how much can it spend on that? How fast can it do something like this?
Well, you bring up competition, and On is a great competitor that has a lot of momentum in the marketplace. Another one is Hoka. I'll point out that Nike has historically made their living with younger consumers, whereas On and Hoka have the sweet spot of they're selling at consumers age 35 plus. Where Nike's seeing competitive pressure is from Adidas, from New Balance, with those younger consumers. And I think those younger consumers just have not been excited by the product offering. There's been a lack of newness that's opened the aperture for competitors to gain some market share.
Hey, Jim, appreciate it. Thanks a lot. Jim Duffy over at Stifel joining us there. Bonnie, I just want to point out that Intel has resumed trading after that trading pause. The stock is up almost 6% on that report from the Wall Street Journal that Qualcomm has approached Intel about a takeover in recent days.
Yeah, absolutely. Breathing some life into the NASDAQ today, too. So again, climbing now as that volatility pause has been lifted. We're up almost 7% now for Intel.
Yeah, we will definitely be keeping an eye on those headlines as Intel is up 7% and then Qualcomm down 3% on that news. All right, we're about half an hour away on the close of the day on this Friday. You're looking at volume still holding in here, even though the markets aren't doing that much. Volume is still higher over its 10-day moving average of about 48% for the NASDAQ as you have that index rebalancing. All right, coming up, you got a special conversation with North Carolina Governor Roy Cooper that says swing states gear up for a critical election season. This is The Close on Bloomberg. As Election Day nears, presidential candidates Donald Trump and Kamala Harris are crisscrossing the 7 swing states, North Carolina being one of them. For more on how things are going on the ground, we want to bring in Bloomberg's Anne-Marie Hordern, who's joined by North Carolina Governor Roy Cooper. Anne-Marie?
Yeah, we welcome our Bloomberg TV and radio audiences from North Carolina at the Governor Mansion with Governor Roy Cooper. Thank you so much for joining Bloomberg TV.
Glad to be here. Thanks.
Your state is getting more interesting by the day, and it's really in focus now given this explosive report overnight from CNN about the sitting lieutenant governor, Mark Robinson. He's also the gubernatorial candidate on the Republican side. Salacious, explicit, very offensive words he was using on a porn forum. He's come out and said this is trash tabloids. Do you think this changes the race?
Well, these comments were shocking, but they really weren't surprising for Mark Robinson. He has a history of these kinds of inflammatory comments that completely disrespect women, that incite violence. We've known for a while that he was someone who is unfit for office. Not only should he not have been elected to the office he's in, he certainly doesn't need to be governor of the state. I think it makes it even more certain that Josh Stein, our Attorney General, will be elected as governor. But I also think that Donald Trump and North Carolina Republican leaders have continued to encourage and support Mark Robinson, and now they're having to reap what they are sowing.
But is it a distraction in the short term, or is this a liability come November 5th?
Well, I think for anyone who has been supporting, encouraging Mark Robinson, it's a liability, because voters are going to look at the fact that Donald Trump and these Republican leaders knew Mark Robinson's character. They knew who he was, the kinds of things that he was saying. This is very on brand for Mark Robinson, and it should hurt their candidacies as well as Mark Robinson's.
Do you think it will?
I believe that it will, yes.
So you think Kamala Harris could benefit from this?
Well, I believe even before this that Kamala Harris was on track to make history and win North Carolina. The last Democratic nominee was Barack Obama, who won North Carolina. This was Biden-Harris's closest loss in 2020, 1.3%. There's that same excitement that I felt in 2008 here in North Carolina in 2024. I think North Carolina can make history again. And I think this makes it more likely because Donald Trump has embraced Mark Robinson for quite a while. And he still, to this day, hasn't said anything negative about Mark Robinson.
Well, he'll be here tomorrow, so potentially he'll have to comment on it.
Yeah.
But just about winning North Carolina for the Democrats, you mentioned Barack Obama. He only won it, though, in 2008, only his first term. Why is this a state that is willing to vote for Democrats at the state level? You know, you've benefited from that, but not at the national level.
North Carolinians are very independent, and they will split their ticket. We've seen this time and time again, so this is not unusual. We're a very purple state. We're always going to be close. But I'll tell you this, Donald Trump has to win North Carolina in order to be president. If Kamala Harris can win this race here, and we believe she can, she's the next president of the United States.
The top issue in national and local polls has been inflation. Do you find that voters are more willing to blame the politicians in Washington, D.C. and not the local ones?
Well, people are frustrated with paying more at the grocery store. They're frustrated that their dollar doesn't go as far. But it's pretty clear that Kamala Harris has worked very hard to help control costs. She's worked to make sure that we've got better paying jobs for people. But now she came to North Carolina and rolled out her economic plan that's going to help small businesses, to help fight higher prices at the grocery store. I think that it is having an effect already, that inflation is cooling in our country. I think that's going to be positive for her, and I think people have listened to her and believe that she cares about middle class North Carolinians. Donald Trump only cares about the wealthy and corporations and himself.
So the rate of inflation has come down, but people are still struggling with the level of prices. That's not coming down. And a lot of things Kamala Harris talks about, you need congressional support, and it's very slim on details. Do you think she needs to dive deeper into the policy discussions?
So she's rolled out a very specific plan, but she's also aware that getting legislation through Congress requires a lot of work and consensus building. And she was a key part of the Biden-Harris administration that got through the Inflation Reduction Act, the Bipartisan Infrastructure Act, the American Rescue Plan, CHIPS and Science, all of this legislation that's going to make generational investments. She was a part of doing it, cast the deciding vote sometime. She understands that she's going to have to get down into the details and find ideas that work. You know, people talk about trying to fight higher prices at the grocery store, and she's talked about trying to fight those prices. There are ways to do that. I'm excited about the fact that she's ready to take this on.
The other top issue in this race, especially North Carolina, that when you look at the polls, is abortion. This is something you've been focused on. One thing I've gathered from all the polling is that voters in North Carolina seem to want a middle ground. They seem to coalescing around, say, 15 weeks as a cutoff for abortion. Do you think this is something Democrats and Republicans could compromise on?
I think you can't compromise on women's right to choose. I don't think that you can compromise on the fact that we've got women who are in danger of dying because doctors are afraid of the government coming in and getting between them and their patient. That's exactly what's happening across the country. Donald Trump is responsible.
But not in North Carolina.
Well, yeah, we are, because we have a 12-week abortion ban, and not only that, but with more requirements, a 72-hour requirement that many women have a difficult time facing. They've put in a lot of other restrictions. So there is an abortion ban in North Carolina that passed over my veto by one vote. Every Republican voted to override my veto. Every Democrat voted to sustain it.
So it came from 20 to 12. But do you think there could be a compromise for, say, something like 15 or 16 weeks?
You know, you can't talk about women's health in that way, because many of these cases are very complicated and often involve parents who really want to have children but have extraordinary complications. This is an issue that should be left to women and their doctors, and that's why people like Donald Trump, people like Mark Robinson are dangerous, because they believe that politicians should be in that exam room with women and their doctors, and that there should be hard and fast rules. And what happens is you endanger women's lives, you take away what should be their constitutional rights.
The former president has said he wants to leave it up to states, which I know is something that you're dealing with now with your Republican-led legislature. I just want to end on your future, because if you think Kamala Harris is going to win North Carolina, you'll be the man to help deliver those electoral votes for her. What do you have in sight? Is it the Court of St. James? Is it Attorney General?
So what I have in sight is the finish line of my term as governor. You know, I want to run through the tape. There's so much happening here, investing these generational dollars for our children and grandchildren. I love public service. I'll see what's next after this.
So you're not done yet. You're not going to end politics after you leave this beautiful governor's mansion.
I don't think so. I do like public service, and we'll see what happens.
Do you think that there needs to be a different, almost more trust in the DOJ right now that we're seeing? Is that something you think you could bring to Department of Justice?
So I'm not going to get into what other cabinet position that I may or may not be involved in. What I do know is that Kamala Harris has got to win before she can make those kinds of choices, and we're going to work hard every day to make sure she does.
Well, I think you're on the short list. Governor Roy Cooper, thank you so much for your time.
Thanks a lot.
That was, of course, Governor Roy Cooper of North Carolina, a very swing state in this election.
That's for sure, and great stuff. Our thanks to Bloomberg's Anne-Marie Horder in there with North Carolina Governor Roy Cooper.
All right, we got some breaking news for you on Johnson & Johnson, saying about 83% of claimants have support its proposed bankruptcy plan. So Red River, that's a unit of J&J, filed Chapter 11 bankruptcy to fully and finally resolve all its current and future claims related to ovarian cancer that arose from cosmetic talc litigation. Red River increased its settlement commitment by about $1.75 billion to a total of $8 billion, and the plan would resolve 99.75% of all pending talc lawsuits against the company and its affiliates in the U.S. Stock is down by about 0.5%, Bonnie.
All right. Well, we have more breaking news as well now, Alex, with our news that Intel has been approached by Qualcomm about a takeover in recent days, according to reports. It is time now for our stocks of the hour. So following those breaking news items, let's get more context from Bloomberg's Ed Ludlow, who joins us now from San Francisco. So Qualcomm approached Intel about a takeover, apparently. Ed, it would be a very nice deal if Qualcomm could get its hands on Intel at a fraction of the price that it was at just a couple of years ago.
Yeah, I would say that it's all according to a Wall Street Journal report that's quite thin on detail, simply that Qualcomm made an approach to Intel in recent days. They cite people familiar with the matter without naming them. Look at the basics. Qualcomm has about $13 billion of cash and cash equivalents on its balance sheet. It has a market cap of around $137 billion to $188 billion to Intel's $97 billion or so. And Intel has just announced this restructuring whereby they have pulled back on some projects, namely in Europe. They have secured a fab customer in Intel and then sort of separated out the fab unit. I would say, Vonnie, that the context that you asked for is that this doesn't make a lot of sense in the context of what Qualcomm has been doing historically. Qualcomm is a smartphone chip name historically. It wants to be a PC chip name, a market that Intel has dominated. But it wanted to do it with its own technology, not necessarily through M&A. So, I mean, we can talk about the logic on both sides, but the market, as you see, is reacting.
So what would be the logic on both sides? Let's start with Qualcomm. What would be the logic in Qualcomm? And does it have to be kind of the whole company? Like, are there bits and pieces of Intel that might make more sense?
One thing that Qualcomm does not have is any experience of manufacturing. We call Qualcomm, like many, a chip maker, but it is not. It is a chip designer. Intel does have US production of its own chips, quite established in Oregon, for example. It could be a consolidation of that for Qualcomm, looking at its own footprint and saying, well, Intel's got a fab and we could fill it with our chips here in America, taking advantage of the sort of political in industry environment. From Intel's side, neither company is commenting, right? We've not verified this report of Bloomberg. It's hard to see the Intel side of the story given the restructuring they've just gone through.
Yeah, and we don't want to go too far down the road of speculation and what would happen if and when, etc., Ed. But at the same time, just a couple of days ago, Intel said it wasn't going to get rid of Mobileye, so it obviously wants to keep the parts of it that it's decided to keep. Does that mean that it would not be amenable to a deal like this?
I guess that's an issue of chronology. So Intel first came out after market close earlier this week saying, this is our plan, pull back in Europe, separate out the foundry business. And by the way, Amazon or AWS has agreed to be a foundry customer. They later issued a statement saying they had no plans to specifically divest their majority stake in Mobileye. Actually, it's been normal practice to this point for Intel to sell small tranches of their Mobileye stake over a period of time. Which is more a sort of return on investment or cash flow thing, but they say they remain committed to the autonomous driving story, which Mobileye is a chip maker focusing on advanced driving assistance tools. So to extrapolate out in the Wall Street Journal report, which again, Bloomberg's not verified, they've just gone through a very big strategic rethink, Intel, another one after a long period of trying to do it. There's no suggestion or reporting from anywhere that they're out there shopping themselves to a rival chip maker.
No, if anything, that was part of the conversation in terms of strategic initiatives. And if anything, they seem to decide against that. So then in terms of Intel being able to go it alone, what are going to be some key markers that you're looking at?
Yeah, I think it's this idea that, if the report is accurate, it's quite interesting from Qualcomm. They have had a period where Cristiano Amon wanted to diversify them away from their historic base. And there is some evidence that they've done that. They're strong in automotive chips. This is the age of the AI PC. Right now, I'm using a Dell XPS 13 that has a Qualcomm Snapdragon X Elite in it. And they're making some headway in that PC market. So why then would they go and do this? And I'm a reporter, Alex. I'm not a banker. I don't know if the maths on this one in terms of how you would finance such a deal. So it's interesting for sure.
Yeah, well, I was taking a look at Qualcomm stock, up 53% over the last year, even though we're off those highs that we've seen.
Right.
All right, Ed, thanks a lot. Really appreciate you jumping on with us for some of that breaking news. Again, coming from the Wall Street Journal, that Qualcomm has approached Intel over the last several days about some kind of buyout, merger, takeover, something along those lines. All right, Bonnie, we're back. 15 minutes away from the closing bell. I'm waiting. I'm waiting for something exciting to happen.
This has injected life, at least into the technology area.
It's true.
Because investors might be taking this kind of seriously, or at least those who might be interested in merger arb or what have you, because we do have both stocks now higher.
Oh, that's interesting that Qualcomm is. And the NASDAQ is now flat on the day, along with the S&P. Volume, though, still higher than the 10-day moving average, but nothing to write home about. Steve Sosnick, Chief Strategist at Interactive Brokers, joins us next to count us down to those closing bells. This is The Close on Bloomberg.
It's a lot of chatter, a lot more talk and hot breath. They did it. I think they should have 50 basis points. Hopefully we're on the way to a soft landing. I wouldn't count my eggs. And I think this one particular thing, all things being equal, has almost no effect on the election.
That was Jamie Dimon not counting his soft landing eggs before they hatch. This is the countdown to the close. I'm Alex Steele.
And I'm Vonnie Quinn.
All right, well, 10 minutes to go until the close of trading on this Friday, and very much a whippy week for the markets. The S&P, though, going nowhere, but the NASDAQ actually erasing most of its losses, now down just 0.2% of 1%. You're also taking a look at a VIX at 16, despite this massive options expiration we have going on. Also, I wanted to point out the technology select sector, the XLK, because we also have index rebalancing, and a lot of that flow is going to be centered around tech stocks, but even that is down by 0.5%, Bonnie.
And I do want to point out that on that report that Qualcomm had approached Intel for a takeover offer, which was originally reported by the Wall Street Journal. We have Qualcomm down 3.6%. Earlier, I quoted Broadcom. I meant to quote Qualcomm. It is down 3.6%. Intel, however, is higher, although it is moderating those gains now. It's up less than it was a little bit earlier on, just positive by about 4.25%.
All right, well, for more analysis, let's welcome Steve Sosnick, Chief Strategist over at Interactive Brokers. Steve, where's my crazy, insane, triple witching index rebalancing day?
It's not. Hi, Alex. It's not the same as it used to be. And because I think the market, there's a few reasons. It does still matter. I'm one of those old school people who says triple witching does matter. And the fact that we rallied 30 points on the SPOOs in the last hour and a half probably had a lot to do with the getting ready for expiration. There's a couple things that make triple witching expiration special. Futures expired, that tends to happen in the morning. There's a morning expiration part. But the other key is you get, first of all, every options class has an expiration today. So you're going to get moves under the surface that you don't necessarily see. And today we have a big S&P rebalance, which might be a little challenging because you have 3 stocks going in that are much bigger than going out. Plus you have Apple getting its weighting raised considerably, which is weird because Buffett sold. It now gets calculated his shares now go to the float, which it wasn't before. So it's kind of backwards. But that's you're going to get some of the movement coming out of that. But the markets know how to handle this by now. We have an expiration every day, so a minor one. But so we've gotten better at handling it.
So curious, Steve. So we obviously got the action this morning, but there'll be more action presumably after the close then. So into next week.
Well, that's it. We're going to see. Things can go a little haywire as we're sitting here talking. So I have sort of one eye on the screens because of it. Maybe just on the final print is when you get some of the last bit of craziness. But this was a tricky week because yesterday's rally was so extreme, we actually blew through a lot of the strikes. So the drama in an expiration are strikes that are expiring right around the money, at the money, plus or minus a little bit. Well, we blew through all of them with that rally. So it's not going to be as dramatic today because so much of the action happened yesterday.
The big funds like volatility-controlled funds, risk parity, CTAs, have they repositioned themselves post-Fed?
Generally, yeah. They will have done. What happens is they're mechanical. So so the question is probably the ones who waited through to yesterday probably had a pretty difficult time doing it. But I don't know. Every fund is different, and that's actually one of the risks to owning some of these volatility-controlled funds. A lot of them write calls. Mm-hmm. This is not necessarily the best call writing environment because you're giving away your upside in exchange for return, for income from the call writing. That puts them in a little bit of a bind. And also, not every manager is created equal. Some of them, I think, are extraordinarily good at handling volatility. I'm thinking of a couple funds that I know are run by former options market makers. Other ones, I'm not quite sure about their option market experience. I'm not going to name names because that's not fair. But these are all the things you have to keep in mind if you're going to start to look at some of those funds.
So just more broadly then, Steve, we have Michael Hartnett today saying, look, this could be a bubble again. We've got all of the conditions in place, including the potential for an 18% growth in stock earnings next year, S&P 500 company earnings next year. And he would caution against too much enthusiasm. Are we in bubble territory?
I hate to use the B word, but I don't disagree with his basic premise.
Wait, is the B word but or the bubble?
The bubble.
Okay.
The bubble. The bubble. There's a few dangerous words. Bubble, this time is different. There's a few phrases that are, I try to avoid because they get you in trouble. But I don't disagree with the basic premise. It's hard to reconcile an economy that might require 50 basis point cuts as the market's expecting. As Powell keeps telling us, look at 25, the market's still pricing in 50. Well, you don't get that unless you have a weak economy, and you don't get you don't get double-digit earnings growth unless you have a strong economy. So something's got to give. And I do think that, people are enthusiastic. Markets love this because remember, the Fed is not about the markets really. They only get involved in markets when the markets threaten the real economy. But what it means in the short term is you've got this excess liquidity coming in from the monetary accommodation, but ultimately the stock market has to follow the broader economy. And so that's where I don't disagree with his premise. The economy has to deliver for these valuations to make sense.
But quickly, it also then depends on why they cut, like what Waller was saying earlier today, that he wanted to cut 50 basis points because inflation was coming down, not because he's worried about growth, versus others on the Fed clearly think something different.
I think the Fed needs to be a little clearer at telling us where neutral lies, what they really think here, because we've managed, I think we've gotten spoiled because since the global financial crisis through COVID, we essentially had zero real and nominal interest rates. Well, most of history, we didn't have either of those. And so what is actually the neutral rate? I'm going to argue it's not a zero real rate. We managed to do just fine through most of our existence with, sort of somewhere between 1% and 2% real rates. We're sort of toward the higher side of that now because inflation's coming down.
Yeah, and, he wants more conversation. Steve wants more talk from the Fed. Oh, man. All right, Steve, thanks a lot. Steve Sosnick, Chief Strategist over at Interactive Brokers. Best notes. We read them every day. They really help us set us up when you're anchoring television and radio. Vonnie, I'm looking at the market here. The S&P is off by 0.2%, but volume about 28% higher than that 10-day moving average.
It's fascinating, isn't it, Alex? We really had that, huge, stunning rally yesterday and today. A little bit more muted, but it's not that people aren't trading. They're definitely trading. They're just not pushing stocks higher like they were yesterday. And
it's interesting, you'd look at utilities, that index up by about 2.7% within the S&P, definitely outperforming. That might be a one-stock story like a Constellation Energy, which we will also get to, or is that a safety play? Is it a dividend play?
A massive day. But as you said, there were two Fed speakers, and we're going to get a lot more next week. You know that,
Steve's
right?
Happy.
The blackout period is obviously done and dusted now, and we're going to get a lot of explaining.
A lot of explaining. We do get some economic data as well. I think we have PCE also coming out next week, so we'll be watching that. Of course, the labor market is going to be key from that perspective. I continue to look at the S&P here, off by 0.2%, off its lows, not near its highs. We're wrapping it up on this Friday.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
About 2 minutes away from the end of the trading day, Alex Steele and Vonnie Quinn here to help you take you through the closing bell. We got a global simulcast for you, joined now by Carol Masser and Matt Miller, bringing together Bloomberg Television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the trading day. I'm looking here, the market at a headline level here, guys, not that exciting, but volume elevated versus that 10-day average.
I'm going to say the crucial moment happened about, 40 minutes ago, when that headline crossed from the Wall Street Journal. I mean, Qualcomm and Intel, it's just a reminder. Friday afternoon, you think things are quiet, and then bam, again, just one headline. But, it got two stocks moving. Intel up about 3%, and you've got Qualcomm down about 3%. I know you guys have been talking about it a lot.
Yeah, I want to point out that the crucial moment was not triple witching. It seems like every quarter someone gets super psyched about expiries and like nothing ever happens. When was the last time an expiry made a difference in the market?
Did you not see the massive volume we had at the cash open today? Volume was up like 222%.
True. I'm just talking about price action because when I look at my 401k, I don't care what the volume was, you know?
Well, we're going to definitely see an impact on Palantir and Dell, for example, because they're going to be entering the index. So that's going to be something to maybe watch for next week. Maybe not today necessarily. I remember the last time there was quadruple witching and a rebalancing, we also saw the same thing, that some of the stocks that were entering the indices didn't necessarily go higher on that particular day, but they did in the days following.
We got some gains for the week, guys, right? Overall, I'm just looking at the Dow maybe up about 1.6% and the NASDAQ up about 1.5%. So overall, Fed meeting, lots of stuff.
The S&P up 1.25%. Yeah. You left out the most important one. When we're talking about the indexes, and by the way, Bonnie, that is Bloomberg style. Indexes.
Indices?
No, that's not right.
Guys, the bells. They're the bells. And we made it to the end of the trading week. You're looking at S&P settling out down by about 0.2%. We're still getting through the numbers here, guys, but the NASDAQ is up by 0.4%. Tried to make a run into positive territory on that Qualcomm Intel report from the Wall Street Journal. Just couldn't hang on to it. And the Dow slightly positive. I want to put out mid caps, which hit a record high and had a record rally yesterday. Mid caps closing down by about 0.7%. The Russell 2000 underperforming, off by 1.1%. Carol.
All right, and just going back to the S&P 500 in terms of, as we dig a little bit deeper into that index, got 173 names in the S&P 500 to the upside, guys. More than 300 names losing ground. Constellation Energy, your best performing name in the S&P 500 this week. At the bottom of the pack, one we talked about last night and this morning and throughout the day, FedEx down about 11% for the
Definitely
week.
Casting a pall over this market. But if you look into the S&P 500, you'll see there's quite a lot of red. So many of the sectors were in the red today. Not, though, down by as much as some sectors were up yesterday. So not a hugely down day. But as you can see, some of the defensive plays were lower, like, real estate, for example, that on interest rates, industrials. But you also had information technology, perhaps a little bit of profit taking before the weekend. That whole sector down just about 0.5%. And of course, let's not forget the Intel Qualcomm story towards the end of the session that definitely had a little bit of an impact, at least on certain stocks.
All right, a lot of red. Certainly,
That's
as you look at that map. What?
The IMAP. Why don't you use GRR?
Okay, there's a couple different ways you can look at the market.
Yeah.
Okay?
But we like the visual of just the
Exactly.
colors. It's a little easier to see sometimes.
It's a really great visual.
Yeah, we don't go on your show and criticize your graphics.
He's a little difficult today. I'm just going to remind you. He's got some cold medicine.
All right, Matt. So the S&P 500
difficult.
ID PW PRD ENDRT was the top performer. Explain what that is to us and GRR.
Is that the utilities index?
No.
All right.
Up 2.7%.
You guys take this outside. I'm going to get to some of the individual
Yes,
gainers,
please.
if I may. Thank you, Alex. Nike, it's up just shy of 7% in today's session, off its highs. Among the top gainers in the S&P 500. We know the story, right? We talked about this yesterday, late yesterday. The company CEO, John Donahoe, he is out. They're bringing back longtime executive Elliott Hill out of retirement to really kind of help this company that's had some struggles in terms of sales. So this one, definitely an outperformer in today's session. Constellation, I mentioned, the best performing name in the S&P 500, not only in today's session, but also for the week overall. Stock up 22% today. Big story. You guys talked about it. We did. And this has to do with Constellation Energy, the owner of course, 3 Mile Island. It's going to invest $1.6 billion, reviving it, agreeing to sell at least one of them, I should say, agreeing to sell all of the output to Microsoft. So Microsoft looking to power all of its computing needed for AI. So that was a big performer, Constellation Energy. One more, CrowdStrike, again, a top performer in the S&P and NASDAQ 100, up 8%. This company, you had an analyst coming out, BMO Capital Markets, underscoring the need for consolidation in the cybersecurity market and that the tech company will likely help lead it, specifically CrowdStrike.
Can I just say?
Yeah, please.
Constellation Energy not only has done so well, but it is it's the number 3 best performing stock in the S&P so far this year.
Wow.
So for the year overall.
Who would have thought?
Huge, right? Yeah. Pretty cool stuff.
That is cool, especially when you feel like energy is one of the biggest losing sectors.
They're oil.
I probably should mention Intel, too, of course, on that headline, because it's up about 3.5% here at the close.
Good flag.
Yeah.
You want to know
I would love
the losers?
Yeah,
okay, FedEx, obviously.
We like to call them decliners.
Oh, okay.
Not
so
losers.
not losers, right? But if you're down 15% in a day, I feel like big L there. We know the story. We broke it yesterday on this program. The biggest drop in 2 years after warning that business would slow in the year ahead and also missing expectations for the quarter that was. It's an ominous sign for the direction of the U.S. economy as a bellwether. FedEx, like UPS, which said earlier this year, was hurt by a pullback on priority services as customers traded down to cheaper shipping options. And we heard about a couple of them today. On Track apparently is a shipper you could use.
Never heard of them.
I had never heard of it either.
But they're trying to build out.
And I think people are less concerned about getting there absolutely positively, tomorrow morning, and it could take a couple of days. Another one of the losers today is Dana. I love this company because they make probably the most famous axles in the world. If you put a Dana 44 or a Dana 60 on your rock crawler, you're definitely not going to break that differential. But they also make other propulsion
Bonnie
equipment.
and Alex, weren't we just talking about this company?
What language are we
axles,
speaking?
right?
Yeah. Well,
Totally. I dig my axle. Go ahead.
I believe that Alex knows about this.
She
stuff. This is the kind of thing
does.
Alex would dig into.
She totally would know.
Anyway, it's a supplier to the auto industry, and it was down after Wells Fargo downgraded the stock to underweight. So essentially a nice way of saying sell, citing expectations for falling sales in the North American heavy truck and Super Duty markets. And then Lennar shares fell the most intraday since August, which was only last month. So traders digesting fourth quarter forecasts for new orders and delivery that were short of the highest analyst expectations. So they didn't, if the market is priced to perfection, you have to do better than meet. You really have to beat.
True.
And they didn't do that. So Lennar shares down 5.33% at the close.
All right, I'm taking a look at the bond market here, guys. We all know the story. Steeper curve, steeper curve, steeper curve. That continued today. So selling all across the curve there. You have 15 basis points now, the spread between the 2 and the 10s. If you just take a look on a weekly basis, you have the 2-10 spread steepening for 5 straight weeks. We have not seen that kind of rally and consistent rally since October of 2021 within the yield market. And you're taking a look at, 15 basis points is that spread there. We're now at the highest since June of 2022, guys.
All right, guys, let's get to some of the stories popping on our radar. This one, among the most read on the Bloomberg, has to do with J.P. Morgan's Jamie Dimon speaking at an event in Washington, the Atlantic Festival, and basically saying he remains skeptical about a soft landing following that 50 basis points cut that we got by the Federal Reserve. And he said he wouldn't count my eggs on that outcome, although we think he means he wouldn't put all his eggs in that basket.
No, I think he means don't count your chickens.
Okay.
Yeah, I think don't count their chickens before they hatch.
Okay, so he means something like that.
It's interesting to me because Larry Summers said essentially the same thing on Wall Street Week, which you'll see a brand new episode of Wall Street Week, a brand new format for Wall Street Week tonight at 6 o'clock. But Larry told David yesterday or the day before that inflation could be a real problem, and it could keep the Fed from going as deep as it wants in terms of the terminal rate. I thought it was also interesting that Summers said the mortgage rate you're going to get right now could be the best deal you're going to get over the next 5 years.
Oh, boy.
So if you're looking to refi, at least according to Larry Summers, you might want to consider now instead of waiting.
Definitely not refining. 2.75% 30-year fix. Okay.
Flex.
Guys, I know. I'm such a jerk.
What do you guys have?
Maybe we should all just take next week off, because that's exactly what we should do if we're trying to get into Manhattan from pretty much anywhere. It is UNGA, the United Nations General Assembly. It's also Climate Week, and it's going to be a complete traffic nightmare. They're already calling it, what was it called? Like a gridlock alert days for the entire week. That sounds horrible, you guys.
We've lived it before. It's not
fun.
And don't think about getting in a cab. It's all about walking or taking the subway, right? It's all about that.
It's the worst. I mean, UNGA, I prefer SantaCon. It's like the worst thing that happens in New York City.
SantaCon?
Wait, are you saying that UNGA is better than SantaCon?
I prefer SantaCon to UNGA, and SantaCon is pretty annoying as well, right?
I don't know where to go with that. At least UNGA's trying to help the world.
Exactly.
So I'll take a little bit of gridlock for helping the world.
All right. Well, count yourself warned, guys. It's going to be rough in terms of traffic next week. All right. That is a wrap on this Friday. Our cross-platform radio, TV, YouTube, Bloomberg Originals, we call it. The closing bell. We'll see you guys all on Monday.
All right. Coming up, it is Factor Friday with Chris Cain of Bloomberg Intelligence. We're going to break down what factors are doing really well, how that sets us up for next week. This is The Close on Bloomberg. Welcome back to The Close. I'm Alex Steele.
And I'm Bonnie Quinn. Let's take a look at where markets closed out the day. Big week. And we did actually close lower, but that's not to say that we didn't have a great day yesterday. So we have just erased a very tiny amount of those gains. Remember, it was a 39th record for the S&P 500 yesterday. We've just shaved off about 0.2%, 11 points. And there was some Fed speak to parse as well as that overhang of some earnings like FedEx and Lennar that didn't really perform as people expected. The Nasdaq 100 down just 0.25% at the end of the day. And we had the SOX index responsible for most of that. So if you look into the SOX, you'll see that really all of the components were lower. So not a great day for the chip stocks. The 2-year yield, 3.591%. Not too much of a difference sort of day to day, but intraday there was a little bit of a turnaround because we saw Chris Waller with comments to the effect that he was less worried about inflation. And then you had Mickey Bowman, the dissenter on the FOMC this time around, saying that basically she wasn't quite as sanguine about inflation and that's why she dissented.
All right, we'll take a look at some of the individual movers. Man, it is a stark difference between the best performing and the worst performing stock in the S&P, so I wanted to highlight those for you. So Constellation Brands, record rally and a record high. It unveiled today with Microsoft that it is going to invest about $1.6 billion to revive 3 Mile Island. They had shuttered one of its nuclear facilities there back in 2019, and it's going to put a lot of money into opening it back up. And this is all about how to power the hyperscalers and data centers. So a big pop for that stock. It is also the third best performing stock on the S&P for the entire year. The first, another power player, Vistra. The second, NVIDIA. Worst performing stock on the S&P is FedEx, down a whopping 15%. Some of its issues idiosyncratic, and some of it could be more cyclical as well. And that's kind of a double whammy. Morgan Stanley saying he wasn't sure how much it was structural or cyclical, but either way, it's just not going to be a really big fix. All right, our top story for this hour. The market action. Bank of America warning of a bubble. And Barry Bannister over at Stifel, well, he actually agrees. He says that the recent rally looks like a 1990s dot-com bubble all over again. Now, he says the S&P could actually slip to the very low 5,000s by the fourth quarter. That would be a pretty big jump, about 13% decline from yesterday. And this comes after a pretty subdued trading day on Wall Street amid some high volume and turnover, Vonnie.
Absolutely, Alex, and another exciting week to come next week. Time now, though, for Factor Friday. Joining us with more on what he's watching is Chris Cain of Bloomberg Intelligence. So, Chris, the momentum factor, how has it performed so far year to date?
You know, I would really characterize it as a tale of two markets with momentum. So, the long-short momentum factor really rocketed higher out of the gate this year. So from January to June, it was up about 14%, meaning high momentum stocks beat low momentum stocks by about 14%. That's a huge factor move. I mean, when you look at all rolling 6-month returns back 20 years, that was a 98th percentile, so basically the highest we've ever seen. But since then, it's really been harmed. In June, the high momentum group was really, I would characterize it as pretty risky. It had a lot of high beta stocks, cyclical stocks, growth-like stocks. And even though we're at all-time highs, underneath the market, it's been pretty defensive. Things like low beta have beat high beta over the last couple months, more defensive, stuff like that. So that's really hurt the momentum factor. So now it's only up about 7% on the year. Still a good performance, but not nearly as good as it was in June.
So what are the key takeaways when it comes to momentum at the moment?
So momentum is changing as it always does. I call momentum the chameleon factor because you can't really, nail it down. But currently, without boring you with numbers, I would characterize it as more expensive than the index, more profitable than the index. So things like high ROE, high ROIC. When you run the cross-factor loadings of the high momentum group, you see positive loadings on growth factors, so very growth-like, cyclical factors, and negative exposure to value, meaning it's very expensive. But that is actually changing.
Right. Okay. How is it changing?
Yeah. So, when equity quants talk about the momentum factor, I think about it as like an intermediate term thing. It's not like momentum means the last 2 weeks. Typically when we say momentum, it's like the last 6 to 12 months. Okay. So it takes a couple months for the portfolio to update and reflect the leadership. So as we've said over the last 2-3 months, those defensives have really led the market. So they will go towards the, into the high momentum or alongside of the group. So we project, and this could change, but we project the highest overweights in the Q1 momentum to be things like real estate, things like utilities, the valuation to come down, and basically the risk to come down, reflecting the defensive nature of the market.
Oh, that's interesting. And then, so where does that leave tech, for example?
Tech has been falling out. It depends on how you form the factor. You could do it sector neutralized or not. I really won't get into that. But, tech has been decreasing over the last couple of months, and I would expect it to continue to decrease in this next rebalance.
So next week, should we see an immediate impact, do you think?
Typically momentum or basically all factor portfolios are typically rebalanced once a month. So it's not a high frequency trading type thing. So we would typically wait till the next month to rebalance. But given the trends over the last 2-3 months, it seems like a pretty good bet that high momentum group will get more defensive, lower vol, and less growth and cyclically oriented.
All right, great, Chris. Really appreciate it. It's so great to always get you on Friday to break it down for us. Chris Cain of Bloomberg Intelligence. And apparently they tell us we survived another triple witching. Wall Street traders who spent the better half of the week with their eyes on the Fed, turning their attention to volatility as U.S. options expired. Bloomberg's Jess Menton joins us now. So what did happen underneath the market? On a headline level, it looked a little boring.
And that's the important point there, because we're also coming off the best day for the S&P 500, the NASDAQ 100 yesterday in about a month. But when you look, obviously, at the top line of this, what the S&P 500 doing, it didn't look like it did too much. But really, it was more important, not just for triple witching, but also the rebalance, specifically for the XLK. So that's the ETF tracking the technology sector and the S&P 500. And that's important because there's been some issues when it comes to some of the weightings there when you're thinking about, say, NVIDIA as well as Microsoft and Apple. And actually, Warren Buffett had trimmed his stake in Apple. So that opened up when it comes to indexes coming in to try to buy some of that and what that would mean for the volume as well as the weighting for that particular index. Because over the past, before June, actually, NVIDIA actually had about 6 straight quarters where it still only had a 4.5% weighting in the XLF until that happened in June, actually. And so now that its weighting is a little bit bigger, it's kind of wonky in that particular corner of that ETF, because some of those, like the top 5 companies, can't have a larger threshold than about 50%. So if you had NVIDIA when it skyrocketed last year, for instance, and had such a smaller weighting, now it's a little bit larger, but it had its stock split back in June. So it's actually underperformed Apple, for instance. So that particular corner for that ETF just hasn't performed quite as well as you probably would have thought it would have.
Just getting back to the expiration of all of these options. Apparently there was a, cluster of them at NVIDIA, $120. Mm-hmm. Do we have to wait till next week to see what happened with those? To see if people rebought? To see if they pushed those out?
Well, I think the important thing too with NVIDIA is actually what's happening with the call options, because coming into this particular event for triple witching, if you looked at what was happening with the ratio of calls as far as what it was relative to puts, it was about a 4-to-1 ratio overall for the S&P 500, but there was a higher elevation for the calls for NVIDIA. So that's something that some options and derivatives traders were pointing out as far as something that could support the market if you do see this, because I know a lot of people want to talk about seasonality in September, in particular the last 2 weeks of September being the worst 2 weeks of the year, but we've seen that trend actually bucking the trend, and that's important, especially as we're rolling toward the end of the quarter, because the S&P 500 is up more than 4% so far for the third quarter.
Well, that's a really good point, but also some mutual funds rebalance now, right?
That is
and then
true.
Into October, so that's going to distort also that seasonality potentially based on what actually is doing well.
Right, and usually October, I know that can also be notorious for being weak, but it's actually more volatile. It's September and August that are typically more the weaker months of the year, so their volatility could pick up next month, but you also have earnings season kicking off on October 10th, actually, with JP Morgan, so we still have a few more weeks, but not a lot of earnings next week. You just have Micron Technology, AutoZone, for instance, so it's probably
I like AutoZone. I keep pitching it to my team, they're like, dude, we're AutoZone out.
It's a barometer on the economy, right? Because you get to see what kind of cars people are buying, and we know there's a lot of churn in that market right now. But as is FedEx and Lennar, right? And we got those yesterday. How much did that overhang the market today?
So obviously those are more for those particular corners and groups of the market, that the sectors that they hold weightings in. But I know that Alex was talking earlier when it comes to volume. So if you use the WEI function, you can see AVAT, which really can track what the volume looked like for the S&P 500. So if you look over the last 30 days, it's actually roughly around 140% higher. So still, even though you were talking about the index level not moving a whole lot, you still saw a lot of movement there with the volume.
All right, Jess, thank you so much. We will be back chatting with you next week to see how things progress from here. That is Bloomberg's Jess Menton. Coming up later this hour, we're speaking to Steve Liberatore, head of ESG and Impact at Nuveen, this ahead of Climate Week. Do continue to stay with us. This is The Close on Bloomberg.
I'm David Westin. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week.
More than what you need to know, it's what you need to think about.
Wall Street Week relaunching tonight. The destination for the smart investor seeking to think more deeply about the business, the economy, and financial markets. And we are joined now with the host, David Westin. It's been a long day.
Yeah.
David, first of all, congrats on a relaunch.
Thank you.
It's never easy to pull something like that off.
Yeah.
How is this going to be different than what you had yesterday?
Well, simply stated, it's stories rather than interviews. I mean, there are interviews, as you saw some of there in that tape, that help us tell the story. But the basic idea is, what is the story we're trying to tell? What's the beginning, the middle, and end? Who are the people who can bring that story the best? With the right narration and the right video and things. So that's what it is. It's a true TV news magazine for business and economy.
And you're taking on huge topics and trying to sort of make sense of them and give us food for thought. What are some of the topics that we should be thinking about right now?
Well, this week, for example, we take on the business of restaurants, try to explain what's behind that. Something Alex actually knows well from personal experience.
I used to work in a restaurant, by the way. That's why I'm saying that. Okay.
Yeah, exactly. And we also talk about the business of higher education, why it's really challenged right now. And a big story is the auto industry, particularly for me, coming from Michigan, but the story of Detroit and its decline and its revival, and of the auto industry, and basically of EVs and what that transition is. We talked to Jim Farley, he's the CEO of Ford, about exactly what he knows, what he's learned about it. And it's interesting how he started out, because his grandfather worked at the River Rouge plant in Ford in downtown Detroit. He then went to work for Toyota, which was basically treason in Michigan at the time, and he learned a lot from it. This is part of what Jim had to tell us.
I worked for Toyota for a couple of decades. I've never seen a competition like this. They have full sponsorship of their government. The government bet on EVs before anyone else in the world. They're the largest market in the world, and now they're the most important market in the world.
So the competition he's talking about there is not Japan, it's not Toyota, it is China. Because he's saying that is the next looming challenge for the auto industry, is China, because they're so heavily subsidized by the government. But at the same time, he's the first to admit they are making a good product in EVs, and they're making it for a very low price. And somehow they've got to catch up with it.
How do you come up with the stories? What's that process like for you guys right now?
We turn to everybody, actually. Right now, I'm soliciting everybody for ideas for stories. But we talk about things we think are relevant to investors. They're Bloomberg stories.
Like the big themes.
Yeah, but things that are larger, that will last a little longer. It's not just the day of air. It's not just even the week of air. But something that a month's time, 3 months' time will still be relevant. In this new world of streaming, where things last forever, and people will go see it on YouTube 3 or 4 months from now, we want it to be relevant to them.
So what else can we look forward to from the first episode, which is, as I understand it, just more than 90 minutes from now?
Yeah, exactly. As I said, we got restaurants, we got higher education, and we've got Ford and the story of the auto industry. Then next week, we go to Pittsburgh and tell the story of regional banks through the eyes of PNC, one of the largest regional banks. Yeah, it's very interesting. And particularly one of their clients, and how PNC was there before the company existed, and now it's over $1 billion business they followed through. And we also talk about social mobility, something we talk about a lot, land of opportunity. It's going down in the United States, the ability of the people who are in lower incomes to move up, why that happens and what can be done about it. A fascinating story of Arizona State University, which has really blown out their whole theory of education, expanded it out to everybody, a lot of online that's really allowing people from lower socioeconomic classes to really move up.
Oh, that's awesome. I didn't know about that one.
Yeah, it's
David
fun.
and I talk all the time.
Yeah, right.
So I was surprised I didn't know that. All right, David, thanks a lot. Really looking forward to it. Thank you so much for joining us on that. Be sure to catch the relaunch of Wall Street Week. The first episode airs tonight at Bloomberg at 6 p.m. in New York. Do not miss it. All right, coming up, it is Climate Week next week in New York City. We're going to talk to Tracey Campbell of LyondellBasell about the trends she is seeing in global petrochemicals market. This is The Close on Bloomberg. Sunday kicks off Climate Week in New York City alongside the UN General Assembly. And the goal is to bring together thought leaders, government officials, investors, and businesses to tackle one of the biggest issues of our time. And one of those companies is LyondellBasell. It is a $30 billion chemical company, one of the biggest in the world, that makes everything that we use, from plastic to food packaging, car bumpers to materials for your surfboard, snowboard, and they're also focusing on creating products for a low-carbon economy. So I want to bring in Tracey Campbell, Executive Vice President of Sustainability and Corporate Affairs for LyondellBasell. Thank you so much for joining, Tracey.
Thank you. It's great to be here.
So let's just start broad, growth, etc. China continues to be weak. Europe is hanging on by a thread. The U.S. seems to be doing all right.
Yes.
When you guys look at the global economy from where you sit, where's the weakness? Where's the strength?
You know, the strength is obviously in the Americas, just like you spoke of. And we got a little bit of a boost, of course, this week from the Fed. And I agree with everything you said. Europe is sort of slow to recover. China's growth isn't quite there. But we really don't subscribe to this doom and gloom because, as you also said, the products that we make are really the fundamentals of society, everything that we're consuming every day. So we still see a lot of growth potential out there for the core commodity products and, of course, more sustainable solutions for the future.
Tracey, when a Federal Reserve cuts the interest rate by 50 basis points, what does that do to your business? What does it do for your suppliers? Does it allow them, borrow more in order to buy more?
Yeah, when I think about the Federal Reserve rate or even quarter-to-quarter rates, we have a long-term growth strategy. We have a long-term investment strategy. The assets that we are playing in have a 20 to 40-year lifespan, right? So I'm excited about the boost that it gives the economy here in the United States. I'm excited that maybe my kids can afford a mortgage, but it doesn't really drive our day-to-day decisions in a company of our size and a global company of our size.
What does drive the day-to-day decisions are, thematic structural shifts. And that brings us to sort of why you're in the city, and that's Climate Week and sustainability. So you guys are producing greener stuff, low carbon stuff. What are some of the avenues you do to get there?
Yeah, there are different means that we need to do in terms of investment. Obviously we're very focused on circularity. You see us a lot in that space.
Circularity meaning like you use what you produce.
Plastic waste, right? Okay. Plastic waste coming back. Plastic waste to oil, essentially, gradually displacing fossil fuels over time. Carbon capture, renewable energy. These are all actions that we're taking today. And of course, we're making sure that they're accretive to earnings, right? Because that's what we're trying to do. The value play here is having an ecosystem where we can make these investments to deliver low carbon solutions or circular solutions that also create company value long term.
So this is where I think you really stand out in the sustainability space, is that you guys talk about it as a business. It's not something fluffy, right?
Right.
So you can get tax credits or other stuff from, say, the government to build things or to retrofit a refinery, for example. What's it like on the end demand side? I mean, do those products cost more? Are customers willing to pay more for renewable plastic or something like that?
There is a big supply gap, right? If you think about the brand owners and the consumers that are looking for recycled materials, that are looking for materials with a low carbon footprint, there is a market and an ecosystem that's being created for that. And we're designing and building the infrastructure in order to make that happen. So we see this new marketplace that's really differential from the commodity or the core marketplace that we're having. The prices are going to be different than the commodity prices. There's standards of supply and demand that's going to impact that, but it's really playing out. And of course, we're new. We're to accelerate that. We do see willingness to pay. We see governments willing to accelerate a lot of investments through subsidies and innovation funds, et cetera.
We're prepping for COP29, obviously, and we're going into Climate Week as well at the UN, which will be, part of the prep for that. Mm-hmm. What's happening with the plastics agreement, and how can you, as a company that wants to make money, how can you contribute to that?
The most exciting thing I think about the plastics agreement, and I'll be in Busan later this year. Every participant, every delegate wants an agreement. And it doesn't matter whether you're an NGO, a plastics producer such as ourselves, or all of the country delegates. We want to see an agreement to address plastic waste. So I'm optimistic that all parties will be able to come together and come up with a few policy levers to actually address the problem. It may not be perfect. It may not be as comprehensive as what all of the countries wanted to see, but everybody's focused on the right policy levers, like plastic content mandates. And I'm not sure if you're aware, but just yesterday, there was a House bill introduced here in the United States, a comprehensive plastics recycling bill that would actually put national recycled content mandates in place, which really accelerates this type of transition that we're seeing.
How is the Global South dealing with this? Because we see in other areas of climate change that it's very difficult for the Global South to come to an agreement when, the Global North has had plenty of time to do whatever it wants.
Yeah, we talk frequently about that just transition, right? Making sure that we're also thinking about the waste pickers and how do we protect their health and safety, and how do we transition them from waste pickers to having a more sustainable self-funding mechanism. We're one of the founding members of the Alliance to End Plastic Waste. I sit on the board today, and we have a lot of good projects going there to try and move them up the value chain so they have these business models that are self-sustaining in countries like Indonesia and other parts of the world.
Which brings me back to sort of the end-use customer and offtake agreements. So typically when big things are built, you want offtake agreements, long-term offtakes, where a customer says, I'm going to pay you X amount, you're going to give me this for this long, and that helps you wind up building the plant.
That's ideal.
Right.
Yeah.
Is that happening for the green products? And if it is, how hard is it to get to the price?
I think it's difficult for the green products. Are the conversations happening? Absolutely. Okay. Because we're trying to move quickly. We're trying to move together through the value chain. I think in terms of our investments, we know what it's going to take. The technology's there. They know what the impact is on their end product that they're selling, whether it's a package or something like that. So the conversations are really not more difficult in the future on the cost of the product as they were in the past, because we know what it is. We know the investments that are necessary. So we can calculate what those prices need to be to meet those thresholds.
Okay, same question, different question.
Yeah.
How long are those conversations versus, say, traditional products?
They're normal, could be a year, 6 months to a year.
Okay.
I mean, when I think about designing a product, I used to be a plastics design, application design engineer years ago, and we didn't think about recycling. Now we do. We think about reuse, recycling. It's just one additional requirement for the future. So those conversations about supply and price and the market, those are all going to happen in those conversations we have with brand owners.
All right, Tracey, thank you so much. We really appreciate it. Thank you for coming by. Tracey Campbell,
thank you.
Executive Vice President of Sustainability and Corporate Affairs over at LyondellBasell. Bonnie?
Well, let's take a look at how markets closed on the day. And thanks again to you, Tracey. We had the S&P 500 shave a couple of percentage units off there, just 0.2%. The NASDAQ 100 was down about 0.25%. So not a whole lot of movement, as you might think, but there was a huge amount of volume, and we had a huge amount of turnover, options expiring, triple witching, rebalancing of the indices. You couldn't get more happening on a day like today, post the 50 basis point move. And of course, a lot of volatility this week. So let's take a look at yields now, because we had a lot more movement towards the back end of the curve, but there was some intraday movement at the front end of the curve after we had Waller and also comments from Mickey Bowman, the dissenting governor, who is a little bit more worried about inflation than the rest of the committee. But we're right back to where we started the day at 359 on the 2-year. And then I wanted to point to the dollar index because, of course, we didn't have any movement from the Bank of Japan. But after that 50 basis point move, we did see a slight strengthening for the dollar index, which had been weakening these last several weeks. This is the close on Bloomberg. Staying with climate now, a key part of getting to net zero is how to finance it. One way is through ESG and impact bonds. These kinds of bonds can be tied to specific projects, finance certain green initiatives. They can focus on gender equity, can even touch on public-private partnerships. Joining us now to discuss it all, the whole universe, is Steve Liberatore, who's portfolio manager and head of ESG impact and global fixed income at Nuveen. Steve helps manage approximately $20 billion in public fixed income at ESG and impact strategies. Steve, I'm only partially kidding. It does feel like the whole universe is somehow, wedged into that ESG area now. I mean, are there any bonds that aren't ESG related at this point?
Well, first off, thank you for having me. I think it depends on how you want to look at it, right? The concept of using environmental, social, and governance characteristics in portfolio construction is really just credit analysis, if you really think about it. So it's a matter of how you apply it and utilize it to construct a portfolio and making sure that you're applying financial relevancy to that analysis. And you want to make sure that you're finding securities that have good governance. Especially as a bondholder, it's an asymmetric payoff asset class, right? You want to make sure that you're looking for securities or issuers that are going to have more stable free cash flow over time in order to ensure your likelihood of being repaid.
So as an investor, do I want these bonds because they're going to appreciate, or do I want them because of that steady income?
I think you want to make sure that you're getting the steady income.
Okay.
I think that that's part of the thing about fixed income. The purpose of it in a portfolio really is return of capital, not necessarily return on capital. So you want to make sure that you're identifying securities, again, that have a profile that going forward, their business is more stable, their ability to generate stability and free cash flow is critical, and being able to look at these securities is an indication that companies are thinking forward and trying to improve their business operations in the future, not just for right now.
How will the 50 basis point cut have impacted this area?
Yeah. Most important thing is to think about impact bonds are still bonds, right? So they're relevant to what is occurring in the market. And from conversations that we've had with issuers, obviously for them, looking backwards a little bit to the zero interest rate policy, corporate issuers for the most part had done a great job of extending out their maturity profile, reducing their debt costs. So you have to look at CapEx needs. And if you're an issuer now and you're looking at the summer of looking at, am I looking to expand my operations at the moment or trying to do something that would indicate an operational improvement, would I issue now if I know that the path for cuts is coming or path for rates are lower going forward? I think the challenge you face now, however, is are rates actually going to go lower? We haven't seen that in the last couple of days based on the reaction from what we saw on Tuesday over concerns on potentially increasing inflation going forward.
In terms of issuance also, how is the election impacting that? Because in some ways, environmental green stuff is very binary in this election. How is it impacting how companies are thinking about strategically issuing?
Yeah, that's the other thing that's occurring. That one of the things that we've gotten specifically from issuers is that they're looking to really understand what the ramifications of the IRA are for them. How can they take advantage of provisions in there that would help them going forward? I think that the concept of people wanting to issue more green types of securities is only going to continue. And that is because we're transitioning, not because of the environmental benefit, but because it's cheaper. And especially when you look at things like solar, wind, those are technologies. The more you invest in them, the cheaper they become. The advent and rapid expansion of battery storage is also helping to alleviate some of the concerns around intermittency.
What bonds are most popular right now in terms of what are they backed by, et cetera?
Yeah, right now the most popular space would be the true labeled green bond, where you're investing in specific projects that are tied to environmental programs, but it not necessarily just solar or wind. It can be pumped hydro, it can be geothermal. You can see it across sectors as well. Distributed generation in the asset-backed security market, for example. Clean water programs and projects that you see from the municipal space as well are also very interesting.
Are people looking to put ESG money that it's targeted specifically for ESG to work, or are they actually looking at these products because they offer a great return and because they're intrinsically valuable?
Yeah, for us, it's all about return first.
I was like, he wants it to be the second one.
Yeah, of course
right,
he does.
It's all about returns first, right? That for us, we're investors, right? We're not making grant money. We're not a concessionary capital provider. Who we are is an investor. And if you're thinking about doing a portfolio or looking at a portfolio investment in this space, first and foremost, it has to be about return because all of this works very well together. If you think about it, the way we view it is environment impacts society, which impacts the economy. So we want to make sure that we have that virtuous cycle in place.
Hey, Steve, good to see you. Thank you very much. This sets us up really well for next week. Steve Liberatore of Nuveen joining us there. All right, some breaking news concerning Boeing. Ted Colbert, who oversees its defense and space division, is leaving the company, Vonnie. It's the first major personnel move made by Kelly Ortberg since he took over as CEO last month. Now, remember, the CFO, Brian West, told an investor conference last week, about a week ago, that the defense businesses would drag on company earnings in the third quarter, posting losses in line with the nearly $1 billion operating loss it posted a quarter earlier.
It's first in a series of moves, most likely. It's the new CEO's first executive change here, Alex. Boeing saying that Ted Colbert, who oversaw its defense and space division, is leaving the company. And you can only imagine that there will be more moves like this coming, of course, Friday after the closing bell.
That's quite interesting as well. Remember, we had a lot of cost overruns with that division on fixed price contracts and negative headlines with the Starliner. It's been a hot mess, and you're definitely seeing that individual now leave the company. All right, time now for Top 3, where we name drop the people driving some of the day's most talked about stories. First up, Donald Trump. He's always driving the stories. He's now allowed Vonnie to sell his $1.5 billion stake in Trump Media. The restrictions preventing him from selling the stock expired Thursday, but he has promised he wouldn't sell. And also you have to wonder, hasn't the stock been hammered?
The stock has been hammered, and of course he's, he keeps some promises. He may not always keep all of his promises, so we can't quite tell yet whether he's getting out of the stock or even if he's, got attention span enough to do that right now. But you can bet your bottom dollar that he has noticed this drop. He would have to, of course, signal it somehow, either register it or signal it some other way that he was selling, particularly if he was selling a huge chunk.
Yeah, we will be watching. What do you got?
Yeah, so my story is this house. It's always a house on an island somewhere, Alex. It's not that I'm dreaming of that. It's just that they keep popping up. And they all seem to be around the $30 million mark as well. Look at this. Former Morgan Stanley CEO listing his home for $29.5 million. I'm not quite sure why John Mack would want to list this particular home, because I think I'd be quite happy to have it in my portfolio.
Maybe he's got
the rest of my life.
Downsize.
Well, maybe he bought the one next door. Have you seen this island?
I mean, literally, you can just scroll through the pictures to the end of the show.
It's in the British Virgin Islands.
Amazing.
Yeah, it's
All
incredible.
right, I'm watching sports, guys, because it actually is cool. LA Dodgers this fall, specifically to see Shohei Ohtani, who may have just had the best baseball game in MLB history. So on Thursday, Ohtani hit 3 homers, 2 doubles, made 2 steals, 10 RBIs, and the Dodgers in a 24 win against the Miami Marlins. He's also stolen 51 bases and has 51 home runs. So that's like a new record, like 50-50, and now he's 51-51. That's huge.
LeBron tweeted out that this guy was insane. So if LeBron is tweeting that out, and if he's impressed, he's got to be an absolute prodigy.
See, I can do sports. All right, still ahead, what investors need to watch for next week. There's still some eco data coming up. We're going to break that down for you. This is Bloomberg.
Well, the Fed decision is behind us. A slew of economic data in front of us, including the Fed's preferred measure of inflation due next Friday. Stuart Paul of Bloomberg Economics joins us now. So I was reading Ian Lincoln's note earlier, Stuart, and he had a funny line about it being passé. Basically, that core PCE is now core PCE passé. Is it, given how we've reacted to the 50 basis points cut?
I don't think it is. So it's not. I don't think it is for the Fed, so it's not for me either. I do think, though, that the core PCE reading that we're going to get next week is going to be relatively favorable news for the Fed. The monthly reading is likely to register just a touch below 0.2% on a month-on-month basis. And that is going to be consistent with the Fed's 2% average inflation target if we're looking at monthly numbers. Unfavorable base effects are going to be supporting the annual number, so we're reading through that annual uptick. But we are thinking that drag from core goods and that monthly number that's consistent with a 2% target is going to be good news for the Fed.
What else are you watching for next week? We get PMIs, which I love. This is S&P Global PMIs. I really love them. We know that manufacturing has been really struggling and that services have been holding up. Do you think that story is going to evolve at all?
I think that there's room for it to evolve. The industrial production numbers were exceptional for August. So when we start thinking about what's going on in September, those preliminary readings from S&P are going to be helpful. But I don't think that industrial production overall is what's going to be driving thematic macro over the next year, really. Industrial production has been improving somewhat, especially on the back of autos production. It was in August. But a lot of that is just due to a large deficit of autos during the COVID pandemic and some catch-up production and auto buying there.
So what are you thinking of Bloomberg Economics now, Stuart? How many more basis points do we go by the end of this year?
We're still thinking another 50 basis points, 25 in November, 25 in December. We are expecting something like a quarterly cadence, but quarterly cadence in 2025, so another 100 basis points of cuts in 25. But if we do see a gap up in the unemployment rate, something approaching 5% early next year, that would warrant a faster pace of rate cuts.
Hey, Stuart, we appreciate it. Thank you for staying late for us on a Friday as well. Stuart Paul of Bloomberg Economics. So let's get to it, what we're watching for next week. I already mentioned it, S&P Global PMIs. Vonnie, I think it's been really interesting to see kind of when the trough really hits, and not only the trough for manufacturing, but when we wind up reaccelerating.
Yeah, and we get the Conference Board consumer confidence data. Remember, that's been extraordinarily interesting because we have confidence holding up and we get those inflation expectations baked in there as well. And of course, the UN General Assembly opening. I hope you're not driving anywhere next week.
No, I should probably take a train in at 6 a.m. AutoZone, I'm really into it. Everyone makes fun of me in our meetings, but I think it's going to be quite interesting on the auto read, particularly anything that they say about those Fed rate cuts and if that will have any sort of impact on their business. And then Wednesday, Meta Connect Developer Conference.
Wow.
Yes, sure. And Micron earnings. That should be fun.
That is a sexy title. Meta Connect Developer Conference.
I think she's kidding.
Southwest Investor Day, Thursday, and then we get more data, including jobless claims and GDP data, of course, and then CarMax, Alex.
Yes.
Should you be excited?
I am excited about CarMax. I mean, a little more in AutoZone. I don't know why, but I am. Also, we got Costco. Typically in this environment, they've done really well. A lot of analysts that are a little bit more conservative on the retail side still like Costco along the Walmarts and the Targets of the day. And then on Friday, I think this will be quite interesting. We get personal income and we get spending as well as that core PCE and UMich as well. Now, this is the final read for September for University of Michigan, so it tends to not be that exciting necessarily, but I always love to see how they revise those inflation expectations and how sentiment comes across, particularly when it breaks down on political lines.
Exactly, and we're going to have to see as well how the market digests this week's just market moves alone, right? We had so many fascinating moves this week, not least of all today, where we didn't really end up too different from where we started, but yet there was a whole lot of churn underneath. The S&P 500 ending the session down just 0.2%. The Nasdaq in total down almost 0.4%, but the Nasdaq 100, thanks to the stocks mainly, down about 0.25%.
Yep, and taking a look at that, we're looking at volume. The volume really picked up into the close. Look at that. The volume closed up for the S&P up 126% above its 10-day moving average. So right at the cash open, right at the cash close, you did have all that churn from that options expiration as well as index rebalancing.
You know what we don't have next week, Alex?
Fed?
Yeah, we don't have a Fed meeting. We don't have that.
Okay.
That's past us. How many weeks have been waiting for that decision, and we finally got it?
Don't we have a ton of Fed speakers? Did I make that up? Is this when they come out in like en masse?
This is when they start explaining. They already did today with Waller and Bowman.
Yeah. Well, that wraps it up for us on this Friday. Happy weekend, everybody. Have a great evening. Balance of Power is up next. This is Bloomberg.